All right, guys, Paysafe just hit record lows back in May when they posted their earnings report. So in today's video, I wanted to jump on, break down the fundamentals. I want to see if this is a good company that we should be investing in, or if we should just move on and find something else. I'm also going to break down the chart and give you my thoughts of where the Paysafe stock is headed from here. So let's jump right in. What's up, guys? Welcome back to This Just In. Thank you so much for joining me today. My name is Justin. I am your host. In today's video, we are going to talk about the Paysafe stock. It has fallen to record lows back in mid-May when they posted earnings reports that did not impress investors. So I wanted to jump on and go over that earnings report. I'm also going to break down the fundamentals. I'm going to go over the main reason why I continue to invest in Paysafe stock and why I think it has a substantial amount of upside in the coming years if you're patient. I will identify a couple of the issues with the stock, and I will also go over the things that I really like. Then I'll break down the chart and give you my thoughts of where the Paysafe stock price is headed from here in the near to short term based off of the technicals. Real quick, guys, before we get started, subscribe to the channel if you're new around here and want to see more videos like this. Come join us at the Patreon if you want to get all of our trade setups. Day One Squad, I love you so much. Thank you for your support. But let's go ahead and get started, guys. First thing we're going to look at. This is the earnings report that they posted back in May. As you can see here, guys, they posted revenue of $367.67 million, which was down 2.6% year over year, but they did beat analyst expectations by 7.52%. The total payment volume was $31.2 billion. Guys, that's huge. Like, they are doing a lot of volume. They're, like we've talked about in other videos, they're doing insane amount of partnerships. They just continue to do that and expand and find new companies to work with. Guys, I will link all my other videos on Paysafe right here if you want to go check those out, where I talk much further, in depth about the overall company. Today, we're just going to get down to the nitty gritty. We're going to focus on why I continue to invest in this stock, even though it continues to fall week in and week out. Next thing, guys, is the adjusted EBITDA. They posted about 104 million, which was a decrease of 8% year over year. The overall earnings report was not that great, guys. They posted huge net loss. That was the main reason the stock sold off so far when the earnings was announced. However, the net loss was attributed to a couple different things, but it was mainly just goodwill. It was mainly just a write down for the massive decrease in the stock price. And so it wasn't necessarily attributed to a ongoing thing that's going to continue to hinder them as a company. One-time issue that, can be resolved very quickly. The next thing, guys, is their Q2 guidance. As you can see here, guys, revenue of 370 to 380 million. Versus the consensus of 395.63 million. Adjusted EBITDA around 100 to 110 million. So they did post forward guidance that was lower than consensus estimates by about 15 million. So obviously investors don't like to see lowered or softened guidance, and that's another reason why the stock sold off. Full year 2022 guidance is revenue of 1.53 billion up to 1.58 billion. The consensus is right around 1.54 billion, and the adjusted EBITDA is around 440 million to 460 million. So guys, when it comes to growth in full year 2022, they are projecting to grow, more than previous years, right? They're going to do more revenue than they did last year. That's good. That's a good sign. There's just one thing that I like about this company and the reason why I continue to invest. We're not going to spend a ton of time going through the fundamentals, but I'm going to show you the issues here. This right here, guys, is a lot of the issues that Paysafe is having. People can't get past the slow revenue growth. And don't get me wrong, they are having a lot of trouble trying to find growth. If you take a look back in 2018, they did 1.14 billion. And then they did 1.418 billion in 2019, 1.426, 1.487. So very, very slow growth, guys, pretty much flat for the last 3 years. However, they're projecting to do 1.5 billion in their trailing 12 months. So that's actually not bad when it's, looking at previous years. They're growing, right? They're still growing, even though it's so minuscule investors just can't get past it, guys. The gross profit continues to do okay. It has showed slowing growth over the last 3 years. Another reason why investors are not that pumped. Net income, guys, this was the big issue in their last earnings report. Negative 1.2 billion. However, like I said, it was attributed to some issues they had with the stock selling off. Companies can get that one-time write-off, right? If they make an acquisition or something happens and their investment falls way below, fair market value or what they purchased the asset at, they can write a one-time goodwill on their income statement to, write it off for taxes. So it's not like that's going to continue to be there. They're not going to continue to lose 1.2 billion a year. So something I think was a little bit of an overreaction, especially when you look at how far the stock is sold off already. Guys, when we look at the balance sheet's not that healthy either. I mean, it's okay. Total current assets, 2.329 billion versus total current liabilities at just 2 billion. So they're getting close there. They could do some things to try to clean up that balance sheet that would probably help. If we drop down to shares outstanding, you can see here, the shares have pretty much stayed flat since they IPO'd. They haven't issued, really any shares. So that's a really good sign. There's one thing, guys, one thing that I love about Paysafe, and I've talked about this in other videos, free cash flow. Their free cash flow is insane. If you take a look here, guys, free cash flow is cash from operations minus capital expenditures. You've got 679.6 million in their trailing 12 months on cash from operations. You take off 6 million on your capital expenditures, you're sitting at $674 million. Huge free cash flow there, guys. And look at the growth that they've seen over the last couple of years. They had a down year last year in full year 2021 compared to 2020. But looking at from 2018 when they were negative on free cash flow, that is huge, guys. Their free cash flow margin is currently sitting at 35%. That is huge. If they can continue to grow payment volume, even if it's slow, they can continue to tighten up operations and get that net income to start narrowing those losses, and they can continue to grow that free cash flow margin, they will do just fine. You just have to be patient, guys. This is not a stock that you are able to buy it and get insane gains right off the bat. It's also got the SPAC thing that is pushing it down because all of the SPACs are getting killed. So I think you got to give this one 3 to 5 to 7 years in order to really see a significant return. They've got a good enough cash flow that I think they will be just fine. As long as they can manage that balance sheet, continue to bring it down, like I said, tighten those net losses and continue to grow payment volume, partnerships, acquisitions. Eventually, guys, something will click. And I think they will just do really well. So I just wanted to throw that out there. The reason why I'm making this video, guys, because the stock just hit an all-time low. I want to show you the discounted free cash flow sheet and give you what I think the stock is worth today. Before we do that, guys, let's jump into the earning estimates because we got to get the growth number to put in the discounted free cash flow sheet. You can see, guys, for full year 2022, they're expecting 3.45% growth year over year. And then 8.38 in 2023, 7.23 in 2024. So guys, the analysts are expecting them to grow at least an average of around 5% for the next 3 years, right? Not bad. Like I said, maybe it just starts to click more and more as year goes on. Guys, they're a young company. They need to continue to mature. Bill Foley is not an idiot. He knows how to run and grow a company. So I think that he can continue to do things to make their growth rate go up and continue to maintain that cash flow margin. They'll do great. If we jump over to the discounted free cash flow sheet, guys. So right now the stock is at $2.37. Like I said, they hit an all-time low back in May when they posted earnings. If we use a 3% growth rate for the next 5 years, pretty much 3% growth rate forever, right? 3% year over year. And we use a 20% free cash flow margin, which, like I said, they're doing 35% today. We come $5.70 on their intrinsic value, which is 138% upside from current levels. So guys, this stock does not have to go back to its NAV price of $10 or its all-time high in order to make a ton of returns. Guys, if we even increase the free cash flow margin to 25%, it will jump your intrinsic value to $7. If you go to 30%, it jumps it to $8.60. If you jump it to 35%, which they're currently doing, you're getting around 10 bucks. Now I know obviously we want to be conservative, so we'll drop that back down to 20. And if we mess around with the growth rate a little bit, we do, let's just say 2% to be really conservative, $5.40. But let's do best case scenario, right? Let's just say they grow 5%, $6.11. Let's say they grow 8%, $7. So guys, the stock, in my opinion, is clearly undervalued, right? Don't get me wrong, there is risk here. People can make an argument on the bear side. There is some things that are not amazing, but they've got to mature. And I think with the free cash flow margin and conversion that they're doing right now, you cannot ignore that. But it's a metric that not a lot of people look at. Even when you break down the price to free cash flow, the stock looks good. I mean, their price to free cash flow is insanely low right now, guys. And so I think that they are kind of under the radar right now. Not a lot of people are realizing the free cash flow is as good as it is. And that is why they have blinders on and the stock continues to sell off, because they're only focused on revenue growth. In the times we're in, you got to see free cash flow. Now, if they can start to trim those net losses and get, net income positive, it would be even better. So I'm not giving up on it yet, guys. I think they've got a lot of upside. Let's jump over and take a look at the chart, and then we'll wrap it up. Guys, the chart's bad, right? The chart is absolutely disgusting. I mean, we peaked out back here in January 2021. We hit a high, almost $20, $19.50, and we have done nothing but sell off ever since then. When we broke that NAV price back in August of 2021, then back tested it as resistance, it was all over. It was all she wrote, guys. Then we had that huge gap down back in November, right after they posted their earnings report. Now, one thing I will say, guys, is we've started to imply that the selling could be drastically, slowing, right? We are not seeing those steep, just, real sharp declines like we were earlier, or, in previous months. It started to kind of, potentially starting to round out or start to bottom out. Now, guys, it could bottom here and it could just stay here and go sideways for months and months and months and years, right? But I think if we can start to see a couple of things, we've got to we're starting to make a higher low. Awesome, right? But we got to get back above $4.54. That's my level that I think is absolutely crucial. You are starting to see some like bullish convergence on your RSI and your MACD. You're losing negative momentum. You're back out of the bearish control zone on the daily. If you could put this higher low in here, guys, and come up and make a higher high than the previous high and make another higher low, then you could be in you could be in business. You could see it, head up, test that 454 level, get back above the 200-day moving average, and now you're in good shape, right? But I just think, guys, dollar cost averaging into this thing is a no-brainer for me, because the cash flow is insane. The stock is at all-time lows, and if you continue to just dollar cost average into it, keep your cost basis low, and be patient, I don't think there's any way that this stock doesn't get back, to over $4.54 over the next couple of years. And if it does that, guys, you're literally more than doubling your money at current levels. So just keep that in mind. A couple of things here on the chart, guys. If we jump over to the weekly, I wanted to kind of show a couple of things here. You are showing signs of losing positive momentum, but take a look at your relative strength index. You're making higher lows, guys. You're making, higher highs. You're getting out of that oversold 30 level. You got to get back above 40, though. That's what I would really like to see. And you really got to start building positive momentum again. You really don't have much on your MACD when it comes to bullish divergence, but you do have bullish divergence on your RSI. So you could be implying a reversal to the upside over the next couple of weeks. If we jump back to the daily, I want to show a couple of things. Guys, what we really need to see here is we really need to see this thing get back above this high right here, 368, make another higher low. Then you're working on a 3 rising valleys, inverse head and shoulders type stuff. And then you've got some momentum shift. If it just, runs up and, gets rejected at that 280 mark and rolls over and dumps again, you're going back to 184. I mean, that's the level, right? Your all-time low from back in May. Honestly, guys, there's not much for, patterns or indicators or trends. There's nothing really that, gives me a ton of confidence right now. I mean, maybe, if we jump back over to the weekly, maybe we've got, some type of like, bullish deep crab or butterfly, let's see. I mean, yeah, maybe a butterfly or something. I don't know. I would just say, guys, this is something you just continue to DCA into. When a trade setup presents itself, I'll make another updated video. But we really just got to see, that momentum shift and that follow through price action where we do some stuff like this. We come back up here and, we continue to make higher lows and higher highs. Once we get back above 456, I'll see you at $8. So that's the level, guys. We got to get back above that. We got to get up here and close that gap. And I mean, gaps fill, guys. If we can fill that gap, you're making insane money at current levels if your price is down at these areas. So let me know what you think down in the comments, guys. I would love to hear what your, prediction is on Paysafe stock. I would love to hear what you think about it. And, come join us at the Patreon if you want to get our trade setups. This video is for entertainment purposes only, not a licensed stockbroker. Always do your own research. I'll see you guys in the next one. Peace.